If you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution.
There are many who talk about a bubble. Some liken it back to 99, 2000. Anything in today's equity trade that says bubble to you?
We do not believe we are in a bubble anything like we were in the late 90s. I was there, and the technologies weren't ready. The costs were too high, too much capital, chased too few opportunities too soon. The seeds for what is happening now were planted during the 20 years that ended in the tech and telecom bubble, and they've been germinating for 25 or 30 years. So we believe we're ready for prime time. The one place where we could see a correction, and it's just a correction, we're not calling it the end of this at all, is in the chip space. Whenever I hear the word shortage, and we started hearing about GPU shortages about this time last year, as ChatGPT was capturing the imagination of both businesses and consumers. So for about a year, we've heard that word, and now we're seeing lead times, we believe, come down for GPUs, for Nvidia in particular, from the 8 to 11 month range to the 3 to 4 month range. So that is suggesting that there was probably a lot of double and triple ordering as the word shortage was making the rounds, and that those inventories will have to be digested.
But is that also because of an increase in supply in terms of output, or is it because you think demand is going down? Which one is it?
Oh, I don't think, no. Demand is not going down, though there is something we expect that I don't hear discussed very much. And it harkens back to the early days of the internet. There was a moment when the internet was taking off, when Cisco was all the rage. And then enterprises started thinking seriously about the need to spend aggressively on this new thing called the internet and the backbone. And they paused as a lot of competition started to make the rounds. And Cisco went down 50% plus as enterprises were pausing. Now, why are enterprises likely to pause or at least go through an assessment? They have to integrate all of their data first. Proprietary data is the secret to AI's success. And they have to map out in excruciating detail their workflows internally and with suppliers and customers and so forth. And this is going to take time. So we think this movement is real, it's going to be massive, but we think there's been a little bit too much too soon.
Well, it's interesting to hear you say that, Cathie, because you and at ARK were very early to acknowledge the impact of AI. Yet your flagship ARK Innovation ETF has not held shares of Nvidia in about a year. You do own some of it in your other ETFs. Do you have any regrets about not having held on to the stock or actually increasing your exposure in the last couple of years after more than 530% gain since 2022, since the end of 2022?
Yes. So you're right. We were very early into Nvidia 10 years ago when it was $5. Now it's roughly $800. And we rode it most of the way up. But I'll tell you what we did. And this is, as a portfolio manager, it's not one action, but what it causes in terms of another action. Last year, we sold in the flagship Nvidia and put it into Coinbase. Coinbase, I believe, is up at least as much as Nvidia, and it is much less well understood. The whole crypto movement, the crypto asset movement, Bitcoin as a new asset class and so forth, is not well understood or completely accepted out there. So we prefer to go where others are not traveling as much. And, as we were moving out of Nvidia, we were saying, okay, regulators are trying to crush Coinbase here, and we were buying it on every dip. Nvidia happened to be one of the sources for that purchase. So it's not just what we do on the sell side; it is what we do on the buy side that you have to look at. And yes, we do hold it in the more specialized funds, but we've been taking profits there as well for reasons I just described.
Yeah, and to be fair, you're right. Coinbase is up about 620% since the end of 2022. So that compares with about 530% gain in Nvidia. Is there anything, though, Cathie, in the Nvidia story that would make you rethink the name and want to become more aggressive on it?
Yeah, if the price came down a lot, we would. The rate of return expectations
or a split.
We have.
Would a split do it? Because I know we've been
no,
kind of
no.
Okay.
That wouldn't change. That wouldn't change anything. No, no split adjusted then the price. So if you look at our portfolios, what we're trying to capitalize on with a Palantir, for example, are the next stages of this AI revolution. What we're seeing in the GPU side of things is Nvidia, all praise to Jensen Huang. I mean, just unbelievable company execution, vision, and so forth. And it's not over. It's going to last a long time. But there are going to be many other companies benefiting from AI. The productivity lift alone is going to be massive, the most massive productivity lift in history, we believe. And so this AI revolution is going to be broad-based and is going to benefit a lot of companies. On the GPU side, of course, we have AMD as competition, but many people do not understand that there's a lot of other surreptitious competition evolving out there. Each of the hyperscalers is evolving its own chip strategy. You have a Tesla that has designed its own chip for an AI chip for the more specialized autonomous driving opportunity. And I think you're going to see a lot of companies developing more specialized chips. We know that Nvidia, of course, will segment the market as well. So we just think that a lot of the assumptions for Nvidia, that this is Nvidia's market and it's alone, that those are changing. But this is simply a cyclical call. And it has to do with that word shortage. And TSMC, for example, Broadcom reported last night. I listened to that call. In the semiconductor solutions part of their business, they were up only 4%, AI up 35%, but everything else down. So there are some cyclical phenomena out there that we think are they're not being integrated into the short-term expectations for a number of stocks.